Pisani. Morning, Bob.
Hello, Carl. Quite a crowd out there. TOST IPO, very boisterous, a lot of fun. Talking to those people earlier today. We'll get to that in a minute here, but 6-1 advancing to declining stocks. The high print was just about at the open. This happened in the last few days recently, so we'll keep an eye on that. Cyclical's doing better. China rebounding. You heard from Eunice, Evergrande, talking about making a bond payment that was rather critical. So that's up. Energy, retail, tech, cyclical sectors doing a little bit better. Healthcare, some of the more defensive sectors lagging a little bit. We're playing the usual rally for the FOMC meeting, but as Art Cashin has pointed out, these rallies going into the FOMC meeting, which used to be so reliable, haven't been so reliable recently, but traders are trying to play that. We're, of course, waiting for the FOMC, some guidance on the tapering before the end of the year. And what is the standard is kind of what the question is. Is it going to be non-farm payrolls trending upward? We need a little more guidance on what it's going to take to get to tapering here. And, of course, we don't know anything about the debt ceiling, whether or not that's a factor in their deliberations at all. Of course, we'll be waiting on that. Meantime, while we're waiting for the Fed, there's been an awful lot of technical damage. The market is just a mess. I think there's only 4 up days so far this year, not counting this month. Not counting today. 30% of the NYSE is only 30% above the 50-day moving average, and 48%. Only 48% are above the 200-day moving average. That's a very bad number. That's the lowest since October 2020. Those are long-term numbers when you're talking about the 200-day moving average. So we got a lot of momentum that's been lost recently. We're starting to get some earnings in. The early reporters and the guys were talking about FedEx, but just let me show you here. The 200-day moving average is 41.12 for the S&P 500. That would be roughly a 10% correction here. And so we're, 6% away from that right now. And you see we violated the 50-day moving average. That's that purple line. The gray line is the 200-day moving average. Meantime, I was mentioning FedEx. The guys have been talking about FedEx. I think the key takeaway is very, very simple. Labor shortages are going to persist into potentially 2022. That's not a company-specific problem. That now seems to be a real problem with the entire country at this point, and FedEx seems to be the leading indicator for that one in particular. Meantime, I mentioned TOST. Boy, quite a boisterous, fun crowd to talk to this morning. I was talking to some of the people there today. They did price above the range. We'll keep an eye on that, but 21.7 million shares at 40. Look at the price talk, 34 to 36. So again, another digital payment processing service, but again, software, essentially. Software continues to do really well. Same over at the NASDAQ. We're waiting for FreshWorks today. This is a big enterprise software company, $36. The price talk, 32 to 34. So this is a $1 billion offering the FreshWorks has. We'll keep an eye on that. That's at NASDAQ. Didn't work quite as well with A.K.A. brands. Again, this is not technology. This is not software. This is Millennial Gen Z online fashion brands. 10 million shares at 11. The price talk was 11 to 13, but actually the real price talk was 17 to 19 a few days ago. They lowered it to 11 to 13. And of course, they have a lot of smaller popular brands with Gen X, but Stitch Fix and some of their competitors haven't done as well recently. Although, Carl, if you take a look, though, at the IPO ETF itself, trend's been up recently. That's a good sign. Recent IPOs doing a little bit better. Carl, back to you.